Hello again, friends. I hope you're all doing really well. So during Friday's session, Support.com stockholders voted overwhelmingly to approve a merger with Greenwich Generation Holdings, who specialize in crypto and energy generation. To many, this was a much anticipated event as it is seen as allowing the company resources of Support.com to be able to open up to more growth opportunities. So why did this cause Support.com stock to tank by 20% when the vote was finalized? Well, in many ways, it actually is a reflection of the true value of Support.com coming to the surface in light of all of this. As I covered last week, and I'm sure many people are currently aware, Support.com has been subject to a large short squeeze effort, which has sent its stock price about 1,800% higher this year when you consider its highest point in year-to-date terms. In anticipation of the vote, the stock had rallied to close Thursday's session at about $26 a stock, which is still a whopping 1,300% up in year-to-date terms. As you can see, after opening Friday's session sharply lower, the stock was on a steady decline through much of the session, which was dealt a further blow when the vote was finalized. Thankfully, for those who are long on the stock, it stayed reasonably flat in the aftermarket. Anyway, the reason for this decline is kind of tricky, but basically, the initial terms discussed in the proposed merger between Support.com and Greenwich Generation valued both companies at much lower levels than what their both current respective market values are. Basically, this merger is a speculator's marriage made in heaven, as both companies have had their own speculative activity driving up their valuations. Support.com through the aforementioned short squeeze, and Greenwich Generation through the sharp rise in the price of cryptocurrency this year. But when you look back at the initial merger presentation from March, the Support.com shareholders were only set to make up 7.7% of the new entity and receive just shy of 3 million shares if the merger goes ahead. Basically, if you were holding Support.com, you would receive 1 share for approximately every 11 that you owned. This was based on a stock valuation of $4.58 per share for Support.com, as it was recognized at the time of the initial talks that Support.com was underpriced by the market. However, as is noted in the March presentation footnotes, these figures are subject to change, and since then the combined value of the proposed new entity has grown from $1.5 billion in March, when this modeling on screen was put together, to now being valued at approximately $7.4 billion if you are to take the current Support.com stock price to indicate the new entity's value, which I think is fair to say is far too high. When they did these calculations in March, they acknowledged that Support.com was undervalued. I'm guessing that when they redo these figures, if the current stock values remain, they will see Support.com as being overvalued, which I'm sure will have an adverse effect on the stock price if it is still overpriced at such time. I think what all of this means is that there is going to be some readjusting of share allocation if the deal does go ahead. Remember, there is still always a chance that it may not be finalized. There always is. However, I think this also casts a greater degree of uncertainty over the markets, as it means there is likely an end date for the Support.com stock approaching, and those that are either short sellers, short squeezers, or even those that are keen to become owners of the new company are unsure what to do. To me, I think this adds a greater degree of instability to an already highly volatile situation that is really going to test the resolve of those trading the stock or holding out for a short squeeze. Key catalysts to look out for in the future will obviously be a new calculated distribution of the shares in the new entity, as well as looking for trigger points for the short squeeze effort, and obviously when the respective stock price is approaching these marks. In terms of where there are distressed short positions right now, basically any time frame where a short trade occurred below $20.80, or this yellow line I've drawn on. The dotted red line I think marks a price point where the short squeeze can come completely undone at $8, as this is the price point where we really start to see the short squeeze rally begin, and it is in this bowl that we perhaps have the nucleus of the rally, which has been gathering since the initial announcements around this merger began, as you can see by this jump in the share price. So just to finish off, here is a summary of the most current short data I have available to me. it is still a very highly shorted stock with about 25.5% of the float held in short positions. This is particularly interesting as only about 36% of the float is available to non-insider and non-institutional investors, i.e. retail investors. There is a mammoth borrow fee of 151%, which would be making those holding out those legacy short positions feeling an increasing pinch as it has increased day by day. In saying that, however, they may be relishing the possibility that there is potential for the stock price to come back down and unlock their short positions, but the time frame for this, or whether it will occur or not, is still obviously very grey. Personally, I haven't been trading this stock as I feel it is quite a risky trade, and I think that Friday's developments just add this extra layer of complexity to the whole situation and make me want to continue to steer clear. Anyway, that's all I'm going to say on this one. Let me know what you think about the stock in the comments. I'm genuinely interested to know what others think. If you want to see more stock related updates or want to help with the social enterprise initiative I'm aiming to turn this channel into, I would encourage you to subscribe to the channel. Until next time, may the markets trade in your favour. Cheers.